This is Alan Bush with the Daily Financial Forecast for Thursday, June 16th. In the stock index futures, we are under some pressure today. This primarily due to concerns that the UK may leave the European Union. Also, we have weaker crude oil prices as a bearish factor. So these two influences taking the indices lower, even though yesterday we did have the Fed statement, which was surprisingly dovish on balance. Also, we feel that in advance of the June 23rd referendum in the UK for them to leave the EU, that we are likely to see stock indices trading sideways to lower, possibly having some trouble in the near term. But once that referendum is out of the way, I think we can see prices stabilize and a new leg up for all of the major stock index futures. Now, moving over to the currencies, seeing the pound under pressure again, this after a poll released yesterday indicating that the Leave campaign is at 53%, the Stay campaign is at 47%. I believe that this Brexit situation is way overblown as far as its economic impact. In fact, some analysts believe that if the UK does leave the European Union, that it will actually be a long-term positive impact on the UK economy. Nevertheless, between now and that referendum, the pound is likely to come under some pressure. Once the referendum is out of the way, I think we'll see the pound stabilizing, possibly then working higher. A lot of central bank policy meetings today. The Bank of England left policies unchanged. The Bank of Japan doing the same. Swiss National Bank also leaving policies as they were. Now, moving over to the interest rate futures markets, we are seeing higher prices for a variety of reasons. For one thing, the dovish Fed statement yesterday, lower crude oil prices, a bullish factor, lower stock index futures, also a bullish factor, and the Brexit situation. All of these combined helping the credit markets to advance, with yields on the 30-year bonds now, the cash bonds, falling to a 16-month low. So in advance of that June 23rd UK referendum, we'll probably see treasuries trading higher. Now, moving over to the precious metals, we have some new highs for the move. In fact, gold now sharply higher and closing in on a 2-year high. We continue to believe that the main trend for the precious metals is to the upside, and this is likely to be a trend that is a multi-year situation. So continue to buy gold and silver on breaks. Nothing has changed in our outlook there. This market has a lot left to the upside. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.